Hey everybody, it's me, Greg Manarino. How are you today? Yes, it is a Saturday. Rare for me to be doing a video on a Saturday. There's a reason for that, and I want to talk about, well, a bunch of things. But I happen to be going over my emails, and I get an overwhelming amount of emails every single day. I do try to go through these from time to time. It's a daunting task. There's no doubt about it. But especially lately, over the past, I'd say week and a half-ish, it's been off the charts, more so than usual. And so I was going through a lot of these questions, and I want to try to cover that here. There's no way I can answer these emails on an individual basis. I do write back once in a while, but I think this is the way to do it, to get through to people a little bit. So let's start off with this, the bond market, something I've been talking about, again, to the point of nauseum, for years, but especially lately. We're seeing this, I have to say, it's kind of a phenomenon with the bond market, and the powers that be, and you know who they are, will not allow the bond market to sell off. The moment that bonds start to sell off, we start to see an incredible amount of buying here across the spectrum, even in an environment of risk. And I've spoken about this. Like, for example, the stock market has been in a melt-up scenario now for quite a while. Actually, since the election of Donald Trump, but especially as of late. So when you see action like we've been witnessing in the bond market lately with this risk-on environment, I mean literally in our face, you know there's something going on here. Now, understanding the intricacies of this is also a daunting task, but we have to look at the environment we are in, and the environment we are in is extreme, and there's no doubt about it. Don't just listen to Greg Manarino here. We heard from none other than Goldman Sachs last week, put out a warning about stock market valuations. You remember that? I actually went off the deep end on it. Look, there is no way that the mainstream or anybody can convince me that this market is not, irrational. There's no other way to put it. The valuations are not just high, but in bubble territory. We've seen this before. That does not mean, let me be clear on this, that we're going to get a reversal today or tomorrow. You know what I'm doing, and I've been explaining this to all of you at length. We're just riding the index. I personally am riding ticker SPY. You all know this. I closed my position on SPY yesterday at the market close. I bought January in the money calls on November 17th, and I held that position all the way till yesterday. I did not want to hold any positions into the weekend. I don't want to take on any more risk than I need to. You understand? We're going to play this game, and we are going to win, period. Now, let's go over a few other things here. Let's talk about the U.S. dollar. All right. Now, all of you understand I am a major dollar bear. I am a major stock market bull. I have been since the election of Donald Trump, and I have outlined this for you with literally 100% accuracy since his election. Okay, the dollar. Let's go back there. The U.S. dollar peaked last December. It began a almost linear slide all the way till September. Then we had a bounce in dollar strength from September to the beginning of November. Okay, the dollar has been sliding since that time. Now, think about this when we're talking about metals here. Metals, gold and silver, are priced in dollars. Okay, if the dollar is bleeding off, what would you expect in a real market to be happening to metals? It's a no-brainer. I don't even have to say it. Obviously, they should be higher here. and I despise talking about metals anymore. Do you realize, and I know you do if you follow this blog, how incredible it is that it's so it's common knowledge what they are doing to the precious metals, and every single troll out here can jump all over it as much as they want. But Wikipedia has a page on it. Addresses the London gold fix, for which I also have spoken about to the point of nauseam. The rigging of the gold and silver markets is going to go down in history at one particular point, just like the Bernie Madoff Ponzi. I have no doubt about it. But you know who's going to be held accountable? Nobody. No bank. We know who these banks are. They're actually named. I've named them. I've talked about them myself. It's on that Wikipedia article. All of the banks involved are named. We know who they are. Just no one wants to look at it. But let's go back to the dollar real quick. So, dollar screaming downtrend since last December. We bounced September, topped out early November. We're sliding again lower. What does this mean for other commodities that are maybe priced to a certain degree of reality? Oil. Crude oil. I expect to see crude oil march much higher. Okay, I get a lot. In fact, I had an overwhelming amount of questions regarding crude oil. It seems like a lot of you like to buy crude or trade crude. I think crude is going up in this environment. How could it not? It's common sense, okay? You want to buy crude, that's fine. I'm writing the indexes. I'm not trying to be fancy here. I am just taking the most direct path to beat this market, and that's what I would suggest doing, but you do whatever you want out here. Now, let's talk more here about the bond market and how this is going to play out when things really start to unravel. This seems to be the question I've got an overwhelming amount of. Okay, so we know how desperate they are to keep this bond market stable right now. It's just beyond belief to see this, and you've been watching this directly on my website, traderschoice.net. I set everything up for you. I mean, you really have nowhere else that you need to go. You can watch Bitcoin there, metals there, although I despise it. I even set up a stock or an ETF analyzer there for you. Bottom of the page on the right side. Chat room there, which I can't even get into anymore myself, my own chat room. It's full like 24/7. I'm glad to see all of you using that. Now look, don't take Greg Manarino's word for what I'm about to say anymore, because there's a lot of guys out here with bigger names than me, much bigger. I mean, like to the point of ridiculousness. You got guys like Alan Greenspan. You know who this guy is, Federal Reserve chairperson, was considered the wizard at one particular point. He's warning about the debt bubble. He came out, and it's not just him. You've got guys like Jeffrey Gundlach, you've got guys like Bill Gross, other multi-billion-dollar hedge fund managers who are coming out as of late sounding like Greg Manarino for the past few years. I've been sounding this along for quite a while. Okay, but now you've got these big wigs out here. Guys with a lot bigger wigs than me. This is my real hair, by the way. What we're going to see at one point here, bear with me on this, is a simultaneous sell-off. That's going to be the big tell that we are at that inflection point. And this seems to be where a lot of you are focusing on, and I'm glad about that. You know, look, we trade the markets that we have. That's great, but that doesn't mean we can't be thinking ahead a little bit here. We need to be thinking ahead a little bit here. So let's talk about these big wig fund managers, not Greg Manarino, although this is exactly what I have been outlining for you since like forever. At one time, we're going to see a panic sell-off in the bond market. Bonds are going to sell off, and no matter what the world central banks try to do, they're not going to be able to stop it. There's going to be a massive run to the door at the same time. Now, when this occurs, and it's going to happen, again, why? The debt is in the biggest bubble the world has ever seen. It's nothing like it. This has been inflated by runaway central banks who have suppressed interest rates now for a decade. and have created distortions across the spectrum of asset classes, again, like nothing we have ever witnessed in history. Interestingly, I'm going to go back to that real quick, but did you see how the market reacted? Yesterday, we had a pretty big sell-off on the news that Trump might be implicated once again in some kind of a Russian scandal because of whatever his name was, this general guy who's going to confess to whatever it is. I don't even pay attention to it because I think it's all just, frankly, dog shit. It doesn't mean a damn thing. But anyway, so you had the dollar react negatively to that. Bitcoin went up. Did you see that? So Bitcoin is kind of like a safe haven asset now. It's crazy. I know how insane that sounds. But that's something else that we can look at. But let me get back on track here. So again, not just Greg Mannarino, Alan Greenspan, bigwig, multi-billion-dollar hedge fund manager, all saying that we are going to see a massive sell-off in the bond market at one particular time. Now, when you see this occur, you're going to see a simultaneous sell-off in the stock market. This is how we know we're at that moment. The moment where this is going to crack. And there's going to be panic selling in the debt market, panic selling in the stock market. The stock market is an inflated bubble on the back of the debt bubble. You know that if you've followed this blog. I mean, you could probably recite all this. Word for word as what I have been explaining. This is how this is going to turn out in the end. And I have no doubt about this. And it should make sense to you. So, again, don't listen to Greg Mannarino anymore. Take these other guys' words for it if you want to. Massive sell-off in the bond market. Massive sell-off in the stock market simultaneously. And if you follow this blog, you know where does cash not go? Exactly. You guys are so smart. It does not go to money heaven. So the cash that is bleeding out or hemorrhaging at one point from the bond market is going to pressure stocks because yields will spike rapidly. You got it now? I know you might have been a little confused about that. Pressure on both of these things. When that happens, this cash that does not go to money heaven is going to make its way over into hard assets. That is going to be the moment where gold and silver begin to actually shine. And these banks are not going to be able to cover it up because people are going to want delivery. They're going to want delivery, and they're not going to be able to get it. It's unbelievable. There are like thousands of people that believe they own the same piece of gold or silver that the COMEX supposedly has. Do your own research on this. It's just mind-blowing. Again, it's so in our face. No one wants to look at it. Okay. I know this is getting kind of wordy, but let me just talk a little bit further to try to answer some of these questions that I've gotten. So I think I've covered the bulk of it so far. Let's talk about more immediate terms with regard to the stock market. We're moving into a time here where generally the stock market does very well. And I believe people are expecting that to happen. So if you know me, and I know some of you have been with me for years, when I see that kind of thing, when I see too many people get on one side of a trade, I start to think it's probably going to go the opposite way. Now, I am not saying that that is going to happen. Okay, we need to be aware that there is a possibility, and I think it's a strong one, that it might happen. Because everyone is expecting one thing to happen. When everyone expects one thing to happen, the opposite usually does. So with that said, I've been explaining to all of you that you need to be trading an index. You don't need to get fancy here and pick this stock or that stock or listen to the imbeciles on CNBC and telling you to buy this stock or that stock or anything like that. Look, these people out there, that, you got to look at the source of where they're coming from. Me, I tell you like it is. I don't care. I frankly don't care. I work for all of you as far as I'm concerned, and I am the Robin Hood of Wall Street. You guys love this. I know. That's another thing that I got my email box lit up. Greg, you are definitely the Robin Hood of Wall Street. So, look, let's get back on target here. The market now technically is stretched beyond belief. It's in bubble territory. We know this. There's a major divergence between earnings and what the stock market is doing. This can go on for a long, long time. It might rip right through December. And who knows? Because of this season that we're in. The Santa Claus rally, everyone's euphoric right now. However, too many people on this side right now. Way, way, way too many. That means that you and me need to be cautious here. If we're trading an index, we should be, obviously, I'm a major bull here. You know that. But that doesn't mean that we shouldn't be anticipating this to turn around. And it could turn around on a dime at any moment. So you need to be cautious right here and right now. We'll see how this plays out next week. Very, very interesting. So look, I know I covered a lot of material here, and I hope I have answered all the questions that I've gotten from all of you, or a lot of you. I should take a snapshot of my email box. You just won't believe what you'll see. I can't believe what I see sometimes. But a lot of great questions from you. You guys and girls are just so awesome. You really are. And I really have a genuine love for all of you, and I mean that. Some of you have been with me since day one. It means so much to me. It really does. And that's why I'm working so hard here for you to try to put this together. Now, as I was saying, I know this has been a long video, and I covered a lot of things. It might even help you out, to watch this again and try to let these concepts sink in to your brain, see if they make sense to you. Maybe it doesn't make sense to you. Maybe this guy sitting here in front of a blank white screen is insane. It's very possible. Anyway, with that said, I'm going to let you all go. And thanks for paying attention to this video. If you think it's been important, if people need to understand this, if you're watching this on YouTube, please take a second. Give me a thumbs up. I did criticize CNBC again. I'm going to get in trouble for that. So let's turn that around a little bit. Let's get this video out there. Share this on your social networks, and let's make a difference. Again, you and me, are responsible for each other and everybody else. If we adopt that kind of an attitude, the world will be a better place. There's no doubt about it. And it got to start somewhere. So might as well start with you and me. I'll see you Monday.